So hey everyone, this is Heather here, and thank you again for coming to the webinar. I was expecting maybe 5-10 people, but we have about 13 people here, so that's even better. So what we are going to do is I'm going to go over sort of what the tool is and how I personally use it, and how I expect others to use it as well. And then I think since we have 13 people, we are just going to ask you to pick anything here. I haven't gone through any of these alerts before, so I have no idea how these are looking. So we'll just pick something and we'll go over it together and see if there were any patterns, there was any technical analysis, any fundamental analysis, anything that we could have used to sort of find any good entries and exits, and then probably sort of profit from it. So I'll start with the tool. So I'm hoping everyone is familiar with the tool, but for those who are not, this is our intraday signals tool, where what it does is it give me okay. So it looks at the data from live options flow, and since this data is live, what it does, it every 5 to 10 minutes it looks at all the data that has come up till now in the market, and it tries to see if there are any signals out of that data. And how it does that is, when we trained this AI, or when we trained this machine learning model, we went back in time to about 3 to 6 months, and we looked at all the data that there was for 3 to 6 months. We started every day. Let's say there was a time 10 a.m. April 5th. We looked at the data, and we gave that AI the previous data for that day, for all the symbols for that particular day, and then we let the AI figure out what factors contributed to a contract going up or down based on all the data for that contract before sort of that particular time in that day. So it's just looking at historical data to try to predict where the contract is going to go, whether it is going to go up, whether it is going to go down. And there are actually two tools within the same tool. So one is, it just one tool, the actual Bullseye tool, it just looks at different contracts and their individual options flow data, and tries to figure out if that sort of individual contract is going to go up and down. But this stock expectation column, this comes from our options droid tool, which we have now removed and merged into Bullseye. So this actually looks at every single contract of the stock, and then tries to see if the stock, the underlying stock, not the contract, the underlying stock is going to go up or down. The reason we have like different kinds of predictions from these two tools is that sometimes what happens is a contract price might go up and down, and the underlying stock might remain the same, or might go in the opposite direction, or might go in the same direction. All right, so the reason I haven't maximized the window is because if we are going to upload it to YouTube, and my Windows resolution doesn't allow me to upload the video on YouTube in sort of a proper format. So I apologize for that. I hope this is still clear. Otherwise, I can actually maybe zoom it out. Okay, thank you. So the reason again we want to have two different tools is, sometimes the individual contracts can move differently than the underlying stock, but since we want to only go with the high confidence plays, we often want these two to match with each other. If they don't, it's fine, but the idea is, if the stock is expected to go in the same direction as the contract, then that's better. Now the question that many people ask is, how can there be a case where a contract is going to go in a very different direction than the underlying stock? So I'll give an example of GME. So for GME, many short-term contracts actually go down in value, especially after a rally. Many short-term contracts actually go down in value if the stock goes up, let's say 20% in 3 days, and then starts going up 1 or 2% every day. Since the implied volatility increases too much, now the stock has to go up in the same sort of expectation based on the implied volatility. Otherwise, the short-term contracts actually start to decrease in value. So it's an example where the stock price keeps going up, but the momentum is not there, let's say. So since the momentum is not there, but the direction is bullish, the contracts are not going to care about that, because the vega in the Greeks is going to actually make the contract price go down while the stock price is still going up. So IV is one sort of main factor. Theta is another factor where the short-term contracts might decrease in value even if the stock is going to go up. So these were just two examples that I wanted to clarify, because many people look at these three columns and they see different kinds of predictions by these two tools and they get confused. So hopefully that's clear. If you have any questions, please keep posting them in the chat bar. And yeah, I think that was it about the tool. The way at least I use the tool is I sort of keep it open, and I have my sound alerts enabled as well. I don't sort of I can't look at the tab all day, so whenever a new signal comes in that's there in my watch list, I just sort of take a look and see if it's high confidence. From the for the last 3 to 4 weeks, I have observed that the high confidence filter has been working particularly well. So these filters, you'll realize some of them work really well in different in one market condition, and maybe some of them in some other market condition. That sort of you have to observe sort of some data to get there. But I've seen that this filter is working really well. So I only look at alerts where, let's say, the confidence is greater than 60%. But other than that, yeah, you a signal comes in, you excuse me, you look at the chart. I have the 15-minute chart open there. You try to draw these support and resistance lines, and then you see if there is a setup there, maybe based on the anchored VWAP. We'll talk about it. Based on the moving averages, we'll talk about that as well. And if there is, then you try to get in and get some quick profits. So with how choppy the markets has been, they go up 2 days, then they go down 3 days. I've seen that my portfolio kept going down 1-2% every day, but since I've started taking profits 20 to 30%, so I got in on a CCIV call, and it's already up 20%, so I'm exiting today. But and for some other people as well, I've seen that as long as you are taking your profits quickly and cutting your stop losses, this market has been doing really well, especially in terms of these bullseye signals. Yes, so Vic, yes, do we have access to this tool? So yeah, I think if you're a free member, then we post about 10 to 20% of all the signals on Twitter for free. If you're a premium member, then everyone gets everything. Yeah, there are no limits there. So that's it for the tool. Let's sort of start going into these signals. What I'll do is I'll still just use the high confidence, because that is going to filter down a lot of bad alerts. So let's pick out anything. Let's not pick out anything from today, but because we won't have enough sort of intraday data, let's go to yesterday and anything before that and pick it. So I'll leave it up to you guys now to pick any of these symbols before we go on. All right, we got this first. So I think if someone else wants to do something else, please keep posting, and I'll keep going over these. So let's open up this. Okay, so it's a call sell. So you can see that the stock expectation was bullish, and the tool is asking us to sell a call. The stock was at 169 and the strike was at 170, and the expiration date is actually 3 days away. So right off the bat, one thing that you should have noticed is that the strike price and the stock price are very close to each other. So if you sell this, you might get exercised, and we don't want to do that. So especially when we are selling, we just want to collect the premium, then get away with that. So the first thing that you should do, and the first thing that you should actually know, is that the tool always wants to maximize its profits. It thinks that maybe this won't reach this strike price, so let's give a very close stock and strike price, so that its premiums, like the price that it can get, is the highest. So the tool is looking at its sort of own performance and utility, but you as a human being have to also sort of look at your own risk and reward. So probably I think here one thing, the first thing that we'll do is, instead of going 170 strike, we might want to sell 175 or 180 strike maybe. So that's one. All right, this didn't move much, so let's go to this. This was posted 17/11/59. Let me pull up the 15-minute chart. All right, right here. Give me 1 second. 11:59. All right, right here. So let's zoom out and see if we have anything. So the first thing that we can see is that the last time the price dipped, it dipped at this very level. So this is a very weak support level. This hasn't been formed right now, but there was one instance where this was sort of, this acted as a support level. So when we are right here at around 11:59, we don't really know if this is a good level or not. But there has still been 2 candles that has sort of respected this level. And when you're looking at candlesticks, you should have a mental model in your mind that allows you to expand and contract these candlesticks into larger or smaller time frames. So So these are 15-minute candles, and there have been 2 times when we have touched, let's say, this level. Now imagine if these were 1-minute candles. Now if these were 1-minute candles, then we probably touched these 2 levels, let's say 3 or 4 times. So on a very small time scale, these did sort of become decent support levels. So that's the first thing that we have when we are right here, because we don't have anything here. The next thing that I'm going to do is I'm going to change the anchored VWAP, and I'm going to start it from here, because this is where the sell-off sort of started, and you always want to anchor the VWAP from a point where an event occurred. It was start of the day, let's say, or some sell-off occurred, or there was a breakout, or start of the year, start of the month. All of these are events that you can anchor your VWAP from, the top, the bottom, anything. So I'm going to change it first. Two more. One more actually. Alright, so looking at this, we have this anchored VWAP line, and again, let's go back here. This is where the signal came in, and right, again, looking at the signal, we want to sell a call. GB, I'll reply to you later on. So we want to sell a call, but we have a resistance support level here. So just keep that in mind. So now let's say here you do end up selling a call. You're going to see that as soon as you sold a call, the price went down and the price started to go up again. So this is the third time that the same level has acted as a support. So when you are selling, or let's say when you are bearish on a stock and you have found this support 3 times, then you might want to start sort of getting a little bit concerned, because this level is getting stronger. If we keep hitting it, it will eventually break, but it has only been 3 times that we have hit it. So we might, let's say, hit it 1 or 2 more times before we actually break it. Second thing that you can observe here is that whenever you are trading, at least this is just my opinion, other people have different opinion, you always want to have your entries and exits on the 20, 50 or 9 either exponential moving averages or simple moving averages. Whenever the distance between the price and these moving averages increases, the price always comes back to them and then starts going away as well. So you can see that here we dipped, and look at this, all this distance. So this would not have been a good sort of bearish setup at all right here, because there is so much distance between the price and the moving averages. We are bound to go back before we actually resume our downtrend. So always wait for the price to touch these moving average levels again before actually going in. So we touched it once, sure, this acted as a resistance, and now we are going down. So there is this a little bit of still space between the price and moving averages. So, but the space is little. So what I'm trying to sort of say is this seemed like an okayish setup, but there was no sort of significant factors that would have made you very confident in going into this setup, because right away we have found a support at this level, and now we have started to go up again. Just after some time, you can see that we have found another support. So probably right here you'd actually exit. You wouldn't stay in the trade anymore, especially since we have started to go up. But if your risk level is slightly larger, then you're going to wait until we cross the 50 moving average. Since we are in a downtrend, what you're going to realize is these moving averages are going to act as dynamic resistance levels, and this anchored VWAP line as well. So here you can see this moving average area acted as a resistance that we started going back down. Let's say your stop was a dynamic stop where you said you're only going to exit if the price actually breaks above the moving averages. It has not done that here. It has not done that here. So sure, you can stay in the trade as long as that doesn't happen, but this was a signal that maybe the price is going to consolidate between these 2 areas, and you have sold a call. So maybe if you sold the 175 call, you would sort of actually be in profit, because those premiums would have decayed a lot. So that selling a call would have been okay, but doing any other bearish setup here would have not been okay, because the price now just keeps sort of juggling between the support area and these moving averages. Even right now, you can see that we touched these moving averages thrice. So we have a resistance level here, and we are just sort of now consolidating. So let's see, you don't have Bullseye and you want to play this Disney. What you're going to do is you want to wait until we break at least one of these levels. So we have a good support level below, and we have a good resistance level above us. So until we break this level, there is actually, you can play these consolidation areas, but I have found that it's slightly harder to play them, especially with mega cap stocks. So a better idea is to just wait for something to break. As long as something breaks with some volume, then that's going to be your setup. Here I would actually like for, let's say, this resistance to break, because that provides us a better setup. Why is that? So let's say we can break the support and we can break this resistance. Why does breaking the resistance provide us a better setup? So I've talked a lot about who puts in the support and resistance levels. It's our algorithm that puts it. We don't do it manually. Maybe it will draw these for us. Okay, so it draws this one and it draws this one. It's not drawing this one. So the reason we want to sort of look at the resistance breakout here as a better setup is because at the resistance we have multiple confluence factors, and I talk about this a lot. You always want to find more than one factors. Sure, we have a support line here, but what else do we have here? We don't have anything apart from this one line. And you'll often see people say, what is a line? Like, what's the meaning of a support line? How can people say that this is a support line? So since you've only touched this line twice, it's not really a strong line, and there are no other signals, so that's a weak signal. But here, let's say we break this level. Here we have a resistance line. Again, it's a loose line, we have only touched it thrice, but we also have the anchored VWAP resistance, and we also have the moving averages right above us. So once we break to the upside, we are actually breaking 3 key levels and then going up. That's a very strong signal as compared to just breaking one level and starting to sort of go down. So please remember that always helps, as the more factors you have going in your favor, the stronger the trade. So let's hope we have a Disney call so someday now from Bullseye, and let's hope we do this breakout. That would be a perfect entry for a bullish play. Do we have any questions on this? Got it. Let's do KC next, because I think KC was all right. Let's see, where is KC? Okay, so it's a put. So looking at the daily chart, since the daily chart is what opens up first, we can see that on the daily chart, let's go to the 15-minute chart after this, but on the daily chart, we have this long-term support area. And this was a support, this was a support, this was a resistance, we broke it, and then this support. But it's a very long-term level. So the longer a level is, the longer term a level is, the stronger it is, and the sort of the more emphasis you should put into it. So we had this long-term support and resistance level. It was resistance here, it's support here, and what we did was we broke it here on May 13th. So once we break a strong support level, what's going to happen is that level is going to act as a resistance level. So if I had not seen these 3 candles, I would still be bearish on this stock, and I would still want to play puts, because what I would expect is for the price to go up, but then since this is a resistance level, touch it and then start coming back again. Before going into the intraday chart, let me actually show you a few examples of this, because this has been happening for almost everything. So we have PLTR, you can see that we haven't been able to cross it. So we tried to cross it in the very next candle, then we went up here, couldn't cross it, and even couldn't cross it today. So you can see we actually went up, but we closed below this resistance level. So I'll show you a few more examples. Same case with NEO, we still have not been able to cross this resistance level now. You can see that today we went above it, but again we closed below it. So once these strong support levels are broken, now it's hard to break them to the upside again. Sure, I'm long both NEO and PLTR. I want these to break, but just highlighting the fact that it's very hard to break them right away. So I played a put here because it wanted to go up, but it then eventually closed down. So that's something to notice. Let's go back to KC. Let me actually go, and I want to see the low. 36.53 was the support level. All right. So this was, just looking at this chart, this was a slightly easier play, because you can see that this has been just in a trend. When the stocks are in a trend, you probably don't even want to draw any lines. If you can see that the stock has been just following these moving averages perfectly. So you can see these are 20 and 50 EMAs. You can see that it goes up, down, then tries to go above it, down, goes above it, down. So in these smooth sort of patterns, what you want to do is you just want to wait for the price to go up to the moving averages, and then as soon as you see a red candle, you enter and you set your stop loss somewhere above this. You always want some margin, so somewhere around here. And that's sort of an easy way to play these, where you can see a clear uptrend or downtrend in the intraday chart. So for here, for this, you can see that the trend is pretty clear, but I still want to look at the 36 level. I believe it was this level. Yes, 38 level, 38, sorry, let me see again. 38, yeah, so 38 is the level, and I'm just trying to make sure I draw a correct level. All right, it's drawing two levels for us, so probably this level I'll remove it. No, I won't actually. So here we let's say we had a put setup. Let's see when it was KC May 14. Let me zoom it out. May 14, May 13. All right, May 14. All right, KC 14, right around here. So this is where this came in, and you can see that we went above the moving averages here. So right sort of here, as soon as the signal came in, you could have seen that we have been following these moving averages, and whenever we go above them, we then start to sort of go below them within some time. So all of these sort of areas. So right here, there was just a setup. It's not sort of a very strong setup, but still, because we don't have any other factors here, sure, I think I can't sort of draw that line perfectly, but sure, I think if you had sort of your brokerage of your opponent, you realize that this was the line, because this is probably sort of the line that's there on the daily chart. You could have probably entered, give me a second, you could have probably entered when we touched this resistance again. Give me a second. All right, probably around this area. And then once you do that, you're just going to wait until either it goes below, so you can see the next support. So you probably enter here, somewhere here, and you exit right away, because you have a support level below, and you actually just in a few candles, actually next day on Monday, you actually went quite low. So this was a full, I believe, $2 candle. So you exit on, let's say, Monday morning when we dip to the next support level, and then that's it. Like, that's the trade. You don't have to stay longer, because once you were expecting the price to go below the moving averages, it did on Monday, but we had a support level right at the price that it touched, so you just exit. If you are sure that the support might break, then let's say you have two contracts, you sell the first one, you don't sell the second one, and you expect the support level to break. But if it doesn't break, then you just exit on both of them. All right, what else? Give me some ideas. All right, no ideas from anyone, so I'm going to see. There was a Facebook trades. Okay, puts. Let's see. Someone asked me to do this. So, all right. So on the daily chart, this is looking okay. Let's see. So this was a put play. Let's see if we have anything. Let's draw the support and resistance lines. All right, we have this. This is a good support. So this is a good resistance. So this was a support. It got broken here. So I'm going to use this one. And then we have another resistance level right above it. I'll do NVIDIA after that. Let's see when the signal came in. The confidence is very low. So personally, I would not play it. But since I think someone asked me to do it, 314, it came 1046. All right, let's zoom. Somewhere around here. So we have a resistance level above. You can see that yesterday this was the high, and today this was the high as well. Even before yesterday this was the high, and 3 days ago on Friday this was the high as well. So intraday you can see that this level, we have tried to sort of break it 2 times, we couldn't break it. So just keep an eye on this level, and this is somewhere where the signal came in. So what you're going to do is, let's say you want to buy 2 contracts. What I think works well is you always want to scale in and scale out. So let's say you have 2 contracts, you buy the first one, let's say on the break of first level, the second one on the break of second level. So let's say you have this intraday resistance. you want to buy the first contract here because you are expecting the price to now dip back because this has been acting as a resistance level. What other factor do we have? We don't have any other sort of factor, which is why this was not a high confidence play, and I didn't want to look at it because we are above the moving averages, which means we are doing good. We are above the anchored VWAP, which again means we are doing good. So we have to sort of find something that is going to give us a decent entry, and this line and this line were the only two sort of signals that we could have used to find an entry on this signal. So this would have been the first entry, and then your stop loss is going to be around here. So you don't want to set your stop loss right at the support and resistance level, because what happens is if the price touches these levels, then since many newcomers have set their stop losses at these levels, everyone gets their stop losses filled, and then the price actually sort of dips a little bit more or rallies a little bit more than it should have, and then you get stopped out. So always leave some margin to set your stop loss. So this would have been your entry, and then again you're not going to exit until you reach another point. So this seemed like the next support point, so you're not going to exit. So you'd still have the contract, you'd be up about 10-20%, maybe 30%, but you wouldn't exit. So you'll wait for the price, because the good thing here is that we have actually gone below the moving averages, which is again good for us. And this is where sort of the AI and everything comes in. It analyzes all the data for us. To a human eye, this looks like a bearish setup because we might actually break out of this resistance because we are above all these levels. We are above anchored VWAP, above the moving averages. But to the AI, if it looks bearish, then you want to look for bearish setups. So this would have been the entry, and you'd still keep your contracts until we actually hit this level. All right, what may happen tomorrow? Yes, that's a good idea. Let's do that. What do I consider a high confidence level? Anything above 60 is usually good for me, because the tool actually sort of compresses these confidence levels from 90 and 80 to 60 and 70, because we had some signals that were 90 or 95%, and whenever those didn't work, people just blindly went in and didn't sort of do any DD. So we have tried to compress these numbers into slightly smaller numbers now. So that's a good idea. Let's do something for tomorrow, because we are not getting any idea. So we have a call buy for Snap. This is a setup that I actually know about already. So with Snap, let me show you a few things. So first, this is a very good support level. Let me see if the algorithm draws it. The algorithm draws it. Okay. So this has sort of acted as a support level here. So that's the first sort of good sign that maybe calls could be a play here. Let's see. Another strong signal here is that I actually was looking at this a couple of days ago, and I found out that Snap has been really respecting this. So this trend line, sort of I drew it out of nowhere. I was just looking at the chart, and this trend line seemed to make sense. So Snap has been really respecting this trend line. You see it went up. There were two times it tried to sort of go above it, but finally the third time it actually broke it. Look at the volume. There was an uptick in the volume, which means we had some sort of a breakout. Then it went down again. So whenever we break a level, the level reverses. So if this was a resistance, it became a support. So I gave a signal here, right, in Discord, I believe, because this was now going to be a support. And although we went up a little bit, we sort of had a resistance, so we came back down again. But look at where we have stopped again. So we have stopped at two support levels now. And again, going back to the factor of finding different confluences, we have one horizontal support here, and then we have one sort of trend line support as well. So right here at this green candle, or even in these two red candles, a slightly longer dated call would have been a perfect play. If we break this, then we are breaking two levels. So we are breaking two sort of strong levels. That's a signal to just get out with some margin. But the expectation here was that we are going to go up. So right now, let's say we are going to go up, and we have a call set up. So let's see if we can do something. All right, this is where we are at, and I think pretty clearly we have one resistance here. Let me straighten it out. So we have one resistance here. We have a pretty decent support somewhere here. So you can see that we have been consolidating here. You go up, down, up, down, up, down, then we tried to break it actually. You can see that we couldn't. Now, a good sort of thing to note here is that when we tried to break this resistance level, look at the volume. There was no uptick in the volume. So when we are going above or below these support and resistance levels, whenever there is volume, that again just provides you another factor of confluence that you can keep in your mind. So snap would be a play if, let's say, tomorrow, because yes, this is a strong level, so I wouldn't enter in snap until we actually cross this level. And you can see that the next resistance is going to be here, and there is this huge gap between here to here that you're going to play for your profits, excuse me. And that's the setup. So for tomorrow, let's see what happens. Let's revisit this maybe in our weekly recap or somewhere else, and then see what happens. But I wouldn't go in right now. I'd actually wait to see if we break this level. Now, another reason you can actually enter right away as soon as the morning starts without actually waiting for this level to break is that if you look at where we dipped today, you'll see that that level on intraday is a support level as well. You can see 1, 2, 3, 4, and then we finally broke it. And what happens when we break a level, when we break a resistance level, it becomes a support. So intraday, you can see that we sort of closed right on that particular level. So unless we sort of go down or up in pre-market or after market, right sort of at the start of tomorrow would be a decent setup for snap, the buy call one. And again, trying to find confluence factors, we can see that from this point in time, we also have the anchored VWAP support from the lowest low of the day 2 days ago, 3 days ago actually, and that just provides us another support. So right here is a good setup for buying a snap call. So we were talking about snap right now. This seems like a decent setup, but then I was talking about SPY and QQQ. Since SPY and QQQ are mostly used for hedging purposes, it's very hard to find directional plays out of SPY and QQQ based on live options flow, based on looking at individual contracts. So sometimes you'll see that the tool isn't that confident. However, I believe there was a SPY and QQQ put place today, and both of them worked really well. So let's see. So let's say a play comes in and the confidence is not that high. If you can find a decent factor to sort of get an entry on the chart, then that's okay. You don't have to always wait for the confidence to be above 60 or 70, let's say. Let's see if we could have done something about it. All right. QQQ put, it came at 1426. Okay, somewhere around here. All right. And one, I think, factor that could have sort of contributed to you getting an entry into this play would have been the break of the anchored VWAP. So you can see if we are anchoring from the low of the from the low of yesterday, this had been sort of acting as a decent support level here, and then we finally at this candle, this is where the signal came in. At this candle, we actually broke three things. So again, always want to find confidence factors. We broke three things here. We broke the 20 moving average, we broke the 50 moving average, and we broke the anchored VWAP. So we have three factors that are telling us that the put that the bullseye just sort of gave is actually a decent setup right here. So we enter right here. As soon as we close, always wait for these candles to close below or above these levels. As soon as we do that, you just enter, and you can actually see that the next candle tried to go above all these three levels. It failed, which is why you always want to wait for the close of these candles instead of just sort of getting concerned and closing out your positions. Always wait for them to break, and then we actually ended the day pretty nicely. So I think that the contract is up about 220 or 30%. So yeah, let's see what we can do for Google tomorrow. I don't know what Google has. So do we have a play for Google? We do not have a play. Let me search. May 14. So there hasn't been a play for Google today, so I wouldn't go into it. But if you just want to sort of get my thoughts on how this price action is looking, it's looking pretty choppy, but hopefully if we open above this level tomorrow, then I'd be bullish if we open below this level, because this has been acting as a pretty nice anchored VWAP. If we open below it, then yeah, try to look for some bearish setups. All right, so I'll see if we have any other requests. Otherwise, let's sort of see if there are any questions. And if there are not, then let's sort of stop the meeting. So let me know if you want me to go over anything else. All right, so thank you so. Okay, we have one more request. Let's do new. I actually wanted to play Neo puts today. I might do them tomorrow, but for Neo, the expectation is that, again, since I talked about this, I won't go into the intraday chart right now, but for Neo at least, the expectation from what I'm seeing is since this has been a support level and we actually broke it, we are now trying to break it again to the upside, and there hasn't been a lot of volume. So either so tomorrow, what let's say I'll do is I'll enter puts right away, and I'll wait to see if we actually do a pullback. I'd obviously expect a pullback, which is why I'm playing puts. But if we actually just go above this level with some volume, and let's say 30-minute chart or 1 hour chart, actually we have a candle that closes above this, and we also break this 20 moving average. Since we have two factors here, I'll actually then just reverse the position and maybe play calls. I'll actually just close the position because when you lose a position, I don't want to play another position at the same time. So I'll probably exit here if this actually goes up. But since I have shades, my position is sort of slightly high, so I'll still be happy. But for Neo, I'm looking at puts right now. I still think all of these growth stocks are in a downtrend. They started to consolidate here, and what happens is you have these different phases. You go up, you consolidate, then you go up again. But here we are going down. We consolidated. We could have gone up to reverse the trend, but we actually went below the consolidation area. So now I just expect these things to keep going down a little bit more before we actually, let's say, reach here and then start going up again. So I'm looking at puts here. Do we have an alert for Neo? Okay, we have a call buy. So this came at 10:30, and I think this was actually a decent one. Let me actually, I think this panned out intraday. Where is 10:30? Okay, this, and you can see that we went from 34 to a high of 34.67. So about 70 cents increase, and then we started to go back again. But I wouldn't have played this call because there is a resistance level right above the current price. I would expect the price to reject that level and then sort of start coming back again. So I wouldn't have played it. Okay, so but this was a good one because the last time I played puts was here. I entered my put here and the next day closed it. So this seems like a decent sort of setup to enter puts again, but maybe I'm completely wrong. We actually break out to the upside tomorrow, and then that's good too. So I think PLTR has a very similar setup where it tried to break this level, but it couldn't. And so we actually now have the 20, the 50, I think it's, we actually now have the 20 moving average resistance and the horizontal resistance. So that's good for us. I might play puts here as well, but let's see. I'll do RBLX as well. Okay, we don't have enough data, so let's on 15 minutes. Okay, so this is again looking nice for calls. Look at this. Let me change the anchor value to 91 to go to the very lowest. Oh, no. All right, so you can see that this on the 15-minute chart again. So you want to just see some trends in the market and then follow those trends. So for this, you can see that this level just can't seem to be broken by this. And what I'll do, at least at the end of the day, I'd play calls here. And if we actually break this level tomorrow, then sure, you exit. But just based on looking at this level, this seems like a decent call play. But because like this was like 5 times, then we have 2 more times here. Even today we tried to close it, but this level is too strong, so I'll probably expect this to hold. If it doesn't and we actually go down, then let's see. So when the charts get messy, I can't sort of draw all these lines, so I try to see if the algorithm draws something for me. So again, you can see that it has drawn pretty decent lines. This is the entry that we want to do for tomorrow. This is going to be our exit because we are at all-time highs. If you think this is going to break out of the all-time highs, then again, you buy 2 contracts, you sell the first one right on this resistance level, and then you just keep the second one to see if there is going to be a breakout or if you're going to pull back. So, but if we actually break it, then you can see that the next support level is actually quite low. So hopefully we don't go there if we are buying calls. Alright, so hopefully I covered everything. Thank you so much to everyone who joined. Since I announced that this is going to be recorded, I was hoping no one is going to come, but thanks for coming. Thanks for joining the webinar. We'll hopefully have more webinars in the future. If you have any feedback or comments, please post them in Discord. I'll see you guys around. Thank you. Bye.